The economic downturn is being reflected in the latest housing start figures. While more money is being borrowed, the Bureau of Statistics says new home building fell 4% in the March quarter, down now for 5 quarters in a row. It's off more than 22% for the year. The direction of interest rates is again in the spotlight. The banks are inching up their mortgage rates, while the Reserve Bank has again left the cash rate on hold. So is now the time to fix or float? Experts say it's a gamble either way, as Kylie Simmons reports.
To fix or not to fix? For homeowners, that is the question.
Yeah, so you're locking them in, yeah. I wouldn't lock them in now. I would lock them in when it gets to zero.
As commentators mull over when is a good time to lock your rates in, some are upbeat.
Fixed rates have drifted up, but they still look reasonably good value.
But others believe the best deals may have passed.
I think the right time to fix rates was probably a month or two ago. That's when rates were at their super low levels.
Official rates began falling in September last year. Ever since, borrowers have been enjoying some of the lowest interest rates in almost 50 years. But after RBA cuts of 4.25%, the pendulum has started swinging the other way. The Commonwealth Bank has increased its standard variable and fixed rates, and a number of other banks have followed, lifting their fixed rates too to cover long-term funding costs. Since March, longer-term fixed rates have been creeping up, and money markets are showing what they think will be the long-term trend as fixing becomes more expensive than the floating mortgage rate. On average, fixed rates have jumped from 5.59% to 6.52%. Consumer research group CANSTAR CANNEX suggests variable rates would have to rapidly rise before borrowers would benefit from paying a higher fixed rate now.
So today you're paying 1.5% more. If rates don't increase by that 1.5% and then a fair bit more, then frankly it's not worth fixing.
John Simon from Aussie Home Loans believes it's not worth rushing in.
Variable rates will eventually go up, but they're not going to go up tomorrow.
He suggests playing it safe by locking in part of your loan.
In the end, the experts say it's an individual choice whether to fix or float. There's no guarantee it'll be right or wrong. And even if the Reserve Bank drops its cash rate, the banks may not pass it on. Kylie Simmons, ABC News, Sydney.